It was another bad day in the stock market with the S&P 500 falling 2.37% and closing at 3236.92. Thank you for watching this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. The Simple Market Signals proprietary model helps financial advisors, money managers, and disciplined individual investors understand the trend direction and the current level of risk in the stock market, allowing you to make better, more informed asset allocation, investment, risk management, and trading decisions, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Wednesday, September 23rd, 2020, and for this analysis we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. This is a one-day, one-minute chart of the S&P 500. So guys, this is just today's price action, and as you can see, once we opened up slightly positive, this dotted blue line is where we would have closed yesterday. We opened up just slightly positive, and you can see that it was just a slow trickle down all day long, and we closed right at the lows of the session. And again, we were down 2.37% on the S&P 500 and closed at 3236.92. The next chart that we're going to look at is a 9-month daily candlestick chart of the S&P 500. So each candlestick represents one day of trading, and I have a few annotations on here for you guys. And what we can see here is we've been in a downtrend really since we hit the all-time highs in the stock market back on September 2nd, right there where I'm circling. And you can see here this blue line is indicating the downtrend. So we're kind of stuck underneath that trend line to the downside. And, you know, it doesn't look like the selling is over. Let's take a look at some possible downsides, and I'll show you some support levels. Now, from where we're at right now, 3,200 is going to be the next area of support. There's some support here at 3,200, but it's not a lot. And when we look at support levels, we need to look at kind of some ranges, right? So 3,150 to 3,200. There's some support here, but it's, you know, there's not a lot, just a few days of trading really over this last summer. So I really don't expect that level to hold. It's always possible, but technically it wouldn't make a lot of sense. Oftentimes when the market is correcting like this, it will correct down to the 200-day moving average or even lower. The 200, this orange line, is sitting right at 3,100 on the S&P 500. So realistically, I think we're going to see at least a downside to the 3,100 level, to the 200-day moving average on the S&P 500. That just makes sense at this point. Doesn't mean it'll happen, but that just makes sense. Now, if the 200-day moving average does not hold, then the next area of support will be found starting at about 3,000 and going down to 2,950. So if we go to the left here, and I'm going to back this chart up, and let's make it a 2-year chart so we can get a little bit more data here. And what you'll see is this 2,950 to 3,000 level on the S&P 500. There was definitely some support there during the summer. So May, June, July, we had some trading right around there, or May and June anyway. Into the first part of July, we had some trading right there at the 3,000 level on the S&P 500. And then back in 2019, you can see that there was quite a bit of trading here for several months, July and then again in September, in the 2,950 to 3,000 window. So, you know, that should provide us with a decent amount of support. And again, you can see some trading right up to that 2,950 level that was acting as overhead resistance back in the latter part of April and through the month of May before we finally got above that. So, guys, at this point, it looks like we're probably headed down to at least the 200-day moving average, if not down to this 2,950 to 3,000 level on the S&P 500. And there's nothing saying that it can't get worse than that, but these would be the next downside targets from where we are currently trading. Now, one other thing I want to point out here is this kind of circled area right here, okay? And let me zoom back in here, and let's make this a 9-month chart again so it's a little easier to see. The reason I have these 2 dates circled here is that this first candle here on September 3rd, just a day after we hit our all-time highs in the S&P 500, our all-time closing highs right here on the 2nd, I was starting to see some changes within the Simple Market Signals proprietary model, and I sent an email to my subscribers warning them of the possible changes to the readings within the model. Now, the model hadn't changed yet, but I was starting to see that we were starting to weaken and that any further downside would likely trigger a change within the readings in the model. And sure enough, the very next day that happened. Okay, so think about this. If you're not a subscriber to Simple Market Signals, think about how nice that would have been to have this information clear back here before this further sell-off. Okay, think about the possibility of how much that could have saved you if you could have rebalanced your 401k or taken some profits or, reduced your equity exposure and increased your bond exposure or increased cash. Those decisions would have to be up to you. Okay, everybody has their own individual style of trading. Some people are traders, some people are investors, some people are young, some people are older, but at least you would have had the information and you could have made an informed decision. And if you guys are financial advisors, how nice would that have been to reach out to your clients right here and say, look, let's take some profits, rebalance, go down to a more conservative portfolio, whatever it is, or at least make a phone call to your clients and let them know that you're seeing some changes, okay? And I do have a lot of financial advisors, including hedge fund managers, that subscribe to Simple Market Signals for that very reason, because this is proprietary. This is my model. It took me over 20 years to figure this thing out, guys, and it's no joke. As a matter of fact, at 3:30 this afternoon, just before I started to record this video, one of my clients, one of my subscribers called me to thank me for what I do and to thank me for Simple Market Signals because he was able to rebalance his portfolio, him and his wife's portfolio, and it saved them money, okay? So he called me just to say thanks. So that was so nice of him. I really appreciate that. But guys, if this stuff didn't work, if this wasn't for real, then why do I have people calling me to thank me for what I do? Okay, so as you can see, I'm passionate about this, but the stock market is hard, guys, and I've been at this a long time. So I would encourage you to take a serious look at Simple Market Signals, guys. It's less than $20 a month, okay? And by the way, if you are a Simple Market Signals subscriber, just this afternoon at 3:30, I sent you another email with further changes to the model. So if you haven't seen that and you are a Simple Market Signals subscriber, please check your email for that. And again, on the 21st, right, any of you that are subscribers know that I sent out a warning email that we were about to see possibly some more changes to the model, and that did happen this afternoon as of about 3:15, 3:30 this afternoon. So I sent an email to you guys at about 3:30, so please look for that if you are a Simple Market Signals subscriber. And again, if you're not a Simple Market Signals subscriber, please subscribe, and I will send you the latest information so you get you up to speed here, and then you'll be on the distribution list for further information. Whether the market is going up, down, or sideways, you'll have this proprietary information all for less than $20 a month. Before we go any further, let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market. And I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the Simple Market Signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this Simple Market Signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the Simple Market Signals model, there are three powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an emailed newsletter, so we will have to have your best email address on file, and make sure this box is checked because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file, all right? So once you subscribe, you go out to the website, simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right. So the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you as soon as we can the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there. All right. So you should get the automatic welcome letter and then the latest edition within the next day or two of your subscription. And then again, the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.